Good afternoon, everyone. Welcome to the Millennial Investor and Lifestyle channel. I am Kadero Hudson, and for today's discussion and lesson, we're going to be talking about investing made easy for beginners. And I made a video earlier this week on investing, on basically how to start a dividend or investing portfolio from scratch. So in my previous video, I had talked about starting with a budget, how to budget, expenses minus what you have coming in on a bi-weekly basis when of your paychecks, whether it's your checks that you receive from your job or business. And I walked individuals how to do that. So we're not going to go over budgets right now. Today's topic is, once you figure out, the amount of, I know that I'm going to invest $200 per check, $500 per check, $150 per check. The next topic is, a decision is to figure out, where do you buy stocks? Where do you buy stocks? You buy stocks at a brokerage. And so in my previous videos, I've alluded to Fidelity, M1 Finance, Charles Schwab. And now I'm going to show you right here, because I have a couple tabs, so that individuals who've never bought any stocks before want to know, like, hey, what platforms do I go to? One good platform you can go to is M1 Finance. And when you go here on M1 Finance, you log in, type into Google, you log in, and once you log in, it looks a lot like this. M1 Finance is famous in the investing community, because when you invest, well, I don't have any in there right now, but when you invest, you create pies. And so you're able to create pies of different investments you want, and then you can buy partial shares. So you buy partial shares of Tesla, Amazon. But the purpose of me having this here is, most importantly, to show you just the functionality of M1 Finance. If you like it in terms of pies or whatnot, then you can go with M1 Finance. For more of individuals that want to see more of a technical feel, Charles Schwab. I know a lot of individuals, they use Charles Schwab. Here's an example of what Charles Schwab looks like here. And then you can get started with, basically, when you log in, you go to the many different screens, put in your checking account, your routing number, and then you're able to sync up, and then you're able to begin to buy stocks. As you see, I have a subscription, not really a subscription, but I really have an account with all of these, because I wanted to test to see which one that I like. I ended up going with Fidelity, which is the next tab. The next tab is Fidelity. I love Fidelity. I use Fidelity for my job, so it was really easy for me to just create a new taxable account, and then it was already synced up there. So I would say here is that it just all depends on the functionality. Now, once you figure out which taxable account that you want to use to begin to invest, then now, Kadero, what do I invest in? I made several videos earlier about dividend investing, individual stocks, but I haven't really alluded to like growth stocks or ETFs. That's what I'm about to do right now. So for individuals who are beginners, who like, Kadero, dividend investing is too complicated, too hard, I don't want to keep up with 10 to 30 stocks, I just want a portfolio just made easy, then it's two ETFs. And I have the two tabs right here. One is VU, which is $356.59. But now in the new age, you don't need the whole $356 to buy a piece of this ETF. All you got to do is that, once you figure out which taxable account, M1 Finance, Charles Schwab, or Fidelity, once you sign up, once you add your checking and your routing number, then you deposit whatever amount of money that you want to start out, and then you click the ticker. Let me show you how you would do it. Like, for example, if you were in Fidelity, once you had all of your money, and for example, you've used with Fidelity, and you go ahead and you transfer your money into the account. You press right here. Then you go right here. You will type in VU, which is VU is the S&P 500. So there's many different. There's the S&P 500. It's the Dow Jones. It's the Nasdaq, which has a lot of the tech companies, Tesla, Nvidia, Berkshire Hathaway. No, I'm sorry, it doesn't have that. Apple, Microsoft, and S&P 500 has the top 500 major companies in America. So basically, what they say the S&P 500 is basically our economy. So a lot of people, they either really just invest in it's the S&P 500, which is VU, or they invest into the total stock market, which will be the next tab I'm gonna talk about. So once you add your money into the account, then all you gotta do is once you press buy right here, go down. It won't let me do it. It won't let me it won't let me do it. It's acting finicky. But then you go ahead and put the money down and you do it. So that's how you go and show how to actually buy actually the whole thing, or you can buy $50 worth, $100 worth, so on. The next holding, if what individuals invest into, is either the S&P 500, which you know that you're buying a piece of 500 companies of the United States. So regardless of the market can go up and down, if in that SP 500 in this ETF, if 10, 20 stocks companies in that portfolio go down, there's gonna be other stocks that goes up the balances, so that you don't have to worry about being as risky as just invest in just Tesla. Right now, I'm investing in Tesla. I have over like $5,000 worth of Tesla in there, and Tesla is like really doing really bad right now. So my $5,000 investment is down like to maybe $500. Scary, frustrating, you know, a little angry because I'm like, wow, because Tesla, it's been doing really good in the past. So right here, this you're able to hedge your bets with knowing like, hey, I've invested across 500 companies. I could be able to sleep at night. The next company the next ETF that people invest to starting out is either VU or VTI. VTI is the total stock market. It has over like 3,000 and something stocks. And so basically, it has all of the 500 companies of VU plus mid caps and small cap stocks. So like mid cap stocks is like Chipotle, uh, and those are that one is a mid cap stock that I know that come to mind because I love tacos and I go there all the time. But there's also a lot of small cap stocks that, small caps are smaller name. It fluctuates, and so highs, lows. So that with VTI, it's the total stock market. So what people tend to do is that so that they don't have to worry about individual stocks, they were just like, hey, I'm just going to just invest into VTI. And so whatever platform you use, M1 Finance, Charles Schwab, or Fidelity, once you deposit your money, people just tend to do just buy VTI per month, $50 a month, $100 per month, and just ride with that because it's the total market. So when the market goes up, your money gonna go up. When the market go down, your market go down. But you just you're not going to be afraid because at the end of the day, we are the United States. I mean, we've had a pretty decent economy for a while. We're in a recession right now, but compared to the world, so a lot of times, people just buy either VTI or the mutual fund VT Sachs. So I would recommend. I'm not a financial person, so don't hold me accountable. But if you're a new investor and you just want to just a surefire way, set it and forget it, VTI is the way to go. And also, before we go, to give you proof, I'm gonna show you my uh, 401k. So with my 401k, because I told you I'm with Fidelity, since I have with with my Fidelity, I invest into the S&P 500, which is FXAIX. It's Fidelity's version of the S&P 500. VU is Vanguard's version of the S&P 500. So it really doesn't matter. You can get the Fidelity's S&P 500. You can buy VU. If I wanted to, I could have bought Charles Schwab version of S&P 500. They're all just it's just different brokerage, different companies, firms following the index, which is the index of the S&P 500. So this is just to show vividly that I walk it like I talk it. So I'm not just recommending something to individuals, and I'm not in it. This shows right here. I started my job last year in June. I've been investing money per month, and is going directly into this index fund. And I every 2 weeks I put it's like $350, and I buy maybe 2.5 shares or whatever the math is, and it's buying this index. Set it and forget it. You see in my 401k, I don't have nothing else. I don't have this and that. Simple. So if you starting out as a new investor, I recommend S&P 500, either the Fidelity version, VU, or if you want to just buy the whole market and just set it, forget it, then VTI is your way to go. Put in 50 to 100, 150, 200, how much you can spare per check, buy the market, and then go about your business. Go buy, a Starbucks coffee, go buy, tacos, wings, everything. You like seafood, boom, do what you got to do, baby. So this is it. I know I've been talking a lot about just the market and dividend stocks, but this is honestly investing made easy. And I recommend you look at this video to figure out which platform you want to invest in, deposit your money, and then either choose VU or VTI, set it, forget it, and then watch your income and your portfolio grow and your net worth grow as well. Guarantee it. All right, guys.